Well, oil prices, of course, can have a huge effect on the economy, and today those prices soared. OPEC, a cartel of 13 major exporters, agreed to cut output, ratcheting down production by more than 1 million barrels per day in an effort to end the record glut of crude. That sent the price of domestic oil up 9%. Steve Sedgwick was in the room where it happened in Vienna.
An absolutely huge day in Vienna, a huge day for world oil markets. And OPEC actually has done something that many people thought was absolutely impossible. They've come together to form a deal to curb production, not only within the group, but also with non-OPEC as well. I spoke to the Saudi oil minister after the meeting to see what he thought of that deal.
We are extremely happy. We think it is the deal we've been seeking. It brings stability back to the market. It will reduce volatility, and it will give an impetus for investment flows to come at a healthy level into the market.
They've managed to take 1.2 million barrels off the table within the OPEC grouping, so cuts across the board and a holding of production levels from Iran, which was a very thorny issue. But also, the added achievement is they believe they've got a deal with non-OPEC to cut another 600,000 barrels from world oil markets. And that non-OPEC cut will be led by Russia, and there's a big meeting next week on the 9th of December to thrash out the details on that as well. There are questions that remain, questions about compliance, questions about what happens if one or two members backtrack. What does that mean for the others? How long will this deal last? And will it bring balance back to a market which many saying is oversupplied as well? So big questions remain. But for now, oil markets absolutely rallying very aggressively, with WTI and Brent going around the $50 a barrel on the back of what is a momentous day in Vienna for OPEC and oil markets. This is Steve Sedgwick in Vienna for Nightly Business Report.